SoFi has had an explosive last couple of weeks. The stock is up almost 40% since May 15th, and the majority of the trading days have been vastly green. This has led to a few interesting changes behind the scenes, and I wanted to take just a couple of minutes to discuss all of them that are not very clearly evident from just looking at the stock price alone. Let's dive into it. So we know why SoFi stock has been rising. One of the biggest catalysts for the stock rise has been the confirmation of student loans coming back. In addition, this is in conjunction with the debt ceiling agreement, which is a macro tailwind that's driving all stocks up. Now, when you combine both of these things, you have a macro tailwind and you have a catalyst for the stock, you end up with huge gains. In 2023, for example, names like Tesla and Palantir are up over 100% year to date. SoFi is up year to date. And many people are now pointing to this to say this is a market turnaround on aggregate. And it makes sense, right? We're towards the end of the Fed raises. People right now are expecting a pause from the Federal Reserve and even some rate cuts within the next 6 months. So what have we been seeing behind the scenes for SoFi? Number one is dark pools. I mentioned this a little bit on the SoFi Weekly podcast last week, but we're seeing huge block trades on private exchanges, likely from institutions that are loading up on SoFi stock. Now, this is obviously very important because institutional buy-in is very necessary if we want to have a sustained run up, not just running up and then giving it all away. Something else that's been going on behind the scenes is an increase in the volume. So if we look at the average volume, in other words, the number of shares that are changing hands from 2 weeks ago and today, we see a very different story. Just a quick glimpse at Yahoo Finance will show you that the 3-month average trading volume is around 41 million shares traded hands daily, whereas the 10-day average is 50% higher at 63.8 million shares. So there's more eyeballs on SoFi, there's more shares that are changing hands. And interestingly, this volume increase has extended to contracts as well as shares. Earlier today, I was scrolling through Twitter and I saw an update on the most traded options contracts. Now, we can see some familiar names on this list, volatile companies as well as gigantic market cap companies that have large investor bases, both from an institutional and a retail perspective. So companies like Tesla, Apple, and Nvidia are obviously on that list. But amongst all of them is a tiny $7 billion company called SoFi. Now, if you just think about that, it might not look like a lot just at face value, but it is, considering SoFi's relatively small size to attract such a huge attention from both institutions and retail investors alike to fuel this run-up to the point where it makes the list for most traded options contracts, basically people that are trying to take advantage of this run-up. Now, one of the other positive consequences of this upward move is that it comes with analyst upgrades. Normally, nothing changes with the underlying company. However, analysts will still chase a stock price if it's going up or if it's going down because they don't want to have too much of a variance between their stock price target and what the actual stock price is. Obviously, analysts try to predict stock prices for a living, and so if you have a huge variance, if an analyst thinks that SoFi is going to $30 and the stock is trading for $4, that's not a good look for that analyst, right? So what happens is the analyst will chase the stock price up and down. And we saw an analyst upgrade today from Oppenheimer. Even though they maintained their same rating of outperformed, they raised their price target to $8 from $7. Now, if the rally continues, I expect more and more of these analysts will be adjusting their price targets accordingly. And the thing about this is that it's a self-perpetuating virtuous cycle. The more that a stock rises, the more that analysts upgrade their targets, and the more that they upgrade their targets, more attention goes to that stock, and the more attention goes to that stock, the more the stock rises. And so you can see how the cycle moves forward when the stock is going up, and unfortunately it also works when the stock is going down. Now, all of this is positive news, but there is a flip side to this, and this comes with all of this volatility that we've been seeing in SoFi so far. On Yahoo Finance, we can see that the short percentage of shares outstanding was around 11% on May 15th, 2023. However, just earlier today, Benzinga posted a list of the highest shorted fintech companies featuring SoFi with a whopping 20% short interest. Now, I had to read through this twice because I was really finding this number very hard to believe. So I'm not sure how accurate this data is. If it is accurate, then that would be really crazy, the amount that the short interest has risen in such a short period of time. And as I think more deeply about it, SoFi has, unfortunately, over the short term, built up a reputation of rallying and then giving up those gains. They've done this consistently over the past 6 months. So that's number one. They're probably looking to profit off of SoFi stock individually, but they're also probably looking to profit off of a macro downturn if that comes. Now, of course, the flip side of that is where there is a high short interest, there is also a higher possibility of a short squeeze, leading to an even more parabolic move upwards. So we know that the company has been getting more attention, and we know that there's more people that are now betting against the stock. And so the natural question is, where does this go next? Well, I think the answer is really the FOMC meeting, which is coming soon. We can see on the Federal Reserve website that the next Fed meeting is coming up on June 13th through the 14th. Coincidentally, on the same day, June 14th, SoFi has an investor day. So I think there's a lot of information for us to digest on that day. SoFi has been doing conferences all throughout. Just today was the Piper Sandler conference, and on June 9th there's another conference, and on 14th they have their investor day. So there's going to be plenty of opportunities coming up over the next week for Anthony Noto to promote the underlying fundamentals of the company, which he consistently reiterates are solid. In fact, just today, earlier on the Piper Sandler conference, he re-emphasized that they are still on track for profitability towards the end of the year, and perhaps even faster now with the resumption of student loans, which are coming soon. But if we zoom out of SoFi and we look at all of the stocks, the market in general has been rallying over these past 2 weeks as a result of the debt ceiling agreement, which is a macro tailwind. And what we know going into the FOMC meeting is, by large part, the market is expecting some type of a pause with regards to rate hikes. So at a high level, the Federal Reserve really next week has it in their hands to either extend this rally or completely kill this rally, as we're seeing a very similar pattern of movement across all stocks. And we know that in the short term, the market is a lot of human psychology, and the volatility and the short sellers and the Federal Reserves, all of these factors are really taken into account with regards to the stock price movement in the short term. I think if the FOMC meeting next week is positive and there's no real unknowns for retail investors, then this rally can continue into the low single digits, is my personal guess. But if there's some curveball that's thrown by the Fed, or if the Fed decides to hike again, or if overall they're seeming more hawkish in terms of their sentiment, I do think that the Fed has it in their power to kill this rally. So really, with regards to the short interest, it has the potential to cause a short squeeze if the market is positive, where shorts will be forced to cover, or it has the potential to amplify that move downwards if the macro is negative and the entire market starts to fall next week. Personally though, I bought more stock yesterday and I'm holding for the long term. And actually yesterday I tweeted out that I was officially in the green with regards to SoFi stock, which is definitely positive considering that I was buying the stock as high as the low $20 range and into the teens. None of this really changes for me and what I'm doing for my position, but it's important to highlight because there's a lot of moving factors behind the scenes, and that's not necessarily super evident when you're only looking at the stock price. By the way, I also did a members only live stream with Tanner a couple of days ago where we talked about SoFi, PayPal, and some other things that I'm investing in right now, including real estate and options trading. I'm creating a members section in YouTube and also in Twitter when they approve me. And also we have a premium members section in Discord on the SoFi stock Discord. So I'll be posting those premium members only videos on those three mediums: Discord, YouTube, and Twitter. So that's something to look out for if you want to subscribe for that content. We're going to be doing members only live streams, members only recordings, and I want to be dedicating more time to it. But for right now, this is the Fundamentals of Investing podcast. Thank you so much for listening.